The Thanksgiving holiday week is baked into the data now, and it sure looks like the market is accelerating from where it was earlier in the fall. There are some seasonal and holiday variables to work through here, of course, but as of early December, man, the data, the signs for the 2022 housing market sure look bullish. We're on our way to record low supply. There's no signs anywhere of demand abating. So we'll explore all that and more in this week's Altos Research Market Update. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand. And we make that data available to you before it becomes available in the traditional channels. So it's Monday, December 6th, 2021. And here's what the real estate market is telling us this week. The active inventory of unsold single-family homes this week had a big drop due to the Thanksgiving holiday, of course, to only 350,000 existing single-family homes. As we've been tracking recently, we'll end the year probably just under 300,000 homes available. That's less than the lowest point this year. Since there is really no driver for new inventory to hit the market, we can already see how next year's first and second quarter are shaping up to be another really competitive season for home buyers. We hit a low of 307,000 single-family homes on the market on April 30th of this year, which was actually much later than normal. We're going to be under 300,000 by the first week of January 2022. So you can already see the supplies are going to remain around these record lows all year. By the way, we have so many of these signs, these leading indicators for 2022, and we're going to explore them in more depth in our webinar next week. We'll be looking at impact of mortgage rates, opportunities for first-time home buyers, and other ways to forecast what to expect from the housing market in the U.S. In 2022. The invitation to that webinar is now available. In the description below, click the link to register to join us. That's Wednesday, December 15th at 10 a.m. Pacific. If you're trying to make sense of the headlines and you have buyers or seller clients who need to know how to prepare for 2022, this one's for you. Click the link below to join us. These monthly Altos webinars have been so terrific. Hundreds of realtors and brokers, investors, economists are joining us, and it's a really dynamic set of information conversation happening. So click that link to register for the Wednesday, December 15th, Altos webinar. It's 10 a.m. Pacific. Join us. Okay, when we look at supply and demand through the lens of our immediate sales tracker, we see the holiday very pronounced here, of course. So that's the far right side of the chart here. The new listings will rebound a bit this week, of course, but the volume stays low until later in January. Percentage-wise, those properties that are listing and then taking offers essentially immediately is staying elevated, with 17,000 homes going into contract essentially immediately after listing this week. We are past the annual peak of price reductions. Remember that when we look at the percentage of homes on the market that have taken recent price reductions, there are always some. Many sellers insist, in fact, that if you didn't take at least one price cut, you underpriced. So the normal range nationally for price reductions is around 35%, 30 to 40% of the market takes a price cut. Price reductions accelerate in the fall for sellers who want to take a discount and move the house before the holidays. By December, we're past the peak of price cuts, as those who are still on the market have already done their cuts. They'll hang out through the holidays. Some properties that are overpriced will actually be withdrawn from the market, so that then the number of active with price reductions actually decline. So that's normally to see it declining in December, as we see now. Right now, though, the number of homes, 27%, have had a price cut. That's fewer than normal, and it's falling each week. as normal. So what we could see here last year is when sellers were really surprised by the December demand. There was no seasonality. People just kept on buying right through the holidays. It's a little different this year, but demand is still super high. Market time around the holidays slows also, of course, but this year we're still at half the time on market that homes usually spend. Normally you'd expect 85 to 100 days on market around the holidays. But right now we're at 49 days across the country. Days on market is actually lower than last year at this time because last year was still heating up in December. You can see very strong seasonal patterns here that show us next spring is going to be super competitive again. Days on market peaks just after the start of the year, and then new spring inventory comes on, buyers emerge, and the cycle resets again. So as of right now, it looks like we're going to hit our record lows, record fast time to sell again in the second quarter. The question is, will it get lower than it did this year? But we're going to be back at that record level. It's going to be as competitive. And that brings us to pricing. A median price of a single-family home in the U.S. dipped last week with the Thanksgiving holiday, of course, to $375,000. This is one area where you can see last year's unseasonal strength, that December accelerating demand last year makes the annual comparisons actually kind of tricky. Last year, home sellers in demand were surprised by how many buyers there were lining up, right, and bidding on the few available listings. This year, sellers are a little more prepared for that. But we were peak pandemic and everything was new territory last year. So normally you get big drops over the holidays like we see now. Last year, those dips were much smaller. Buyers were in bidding wars. The new listings prices were staying elevated as a result. And so, we saw the same dynamic in the price reductions chart earlier. This year, we have a more normal Thanksgiving price adjustment. The median price of the new listings, that's the lighter colored line here, dropped to $329,990 this week and will drop again over the Christmas week before rebounding in the second and third week of January. So our 10% annual price gains look pretty clear as we wrap up 2021. And man, the signs look strong for 2022. Okay. That's all the data we have time for this week. As I mentioned, registration for the December Altos Research webinar is now open. If you need to know how the market is set up for 2022, if you have clients or dollars at stake, you should join us. Click the link in the description below here. Of course, the Altos data, to get the Altos data and market reports for your local markets, we track every zip code in the country. To get yours, go to altosresearch.com. There's a link for that below in the description as well. Run a report, grab time with our team. Don't get caught off guard. It's going to be a wild year. Okay, more next week. See you at the webinar.